Hello, this is Imi from iTradeAIMS.com, or AIMS Stress-Free Trading. Oh, it's been a very long time since I recorded the last video. I'm not very disciplined with it, or let's say for some reason I don't do it every day, and that some reason is that it's not an easy job to do. So once I'm done with trading, I really like to focus on other things, such as not trading, doing emails and posts and stuff, and it takes such a long time. It just doesn't leave any time for videos. I love doing videos, but for some reason my experience with videos has been something like I make videos and then there's something goes wrong and it takes such a long time, and then you have to redo it. And I don't really have like a plan for videos. I do it when as it comes to me, and so you can't really redo it and have the same fun out of it. But anyway, I'm doing it right now. I have not done a video on the fruit, but you can see this is a fruit template, normal fruit template. Let me take that off, and I'm going to talk about the first 2 hours of the London session. So this is where Frankfurt opened, and hold on a second. Okay, here we go. This is Frankfurt open. Now you know that the fruit indicator is showing the fruit bars here using this. This is a very good fruit bar on its own, but the angle here is not good. As you know, there are two kind of angles that we check, creating a triangle. One is if you were to draw an imaginary line through this entire price action from this wave. You gotta think in waves, so it apparently looks like this is one wave that went all the way up there. So imagine you were just here at this point. Now let me say again, we don't usually trade before London Open, but I'm just eyeing the chart. There it is, so I thought I'll talk about it. This is one, so this is one trend, the angle of price that goes all the way there. So let's suppose, okay, I've changed it. So we're not going to draw these lines. You don't want to be drawing these lines when we're taking trades, but I'm just showing it now so you can learn about it. So here's an imaginary line which will be in your mind, which goes through sort of the midpoints of the price bars. And then at this point your gator lines would have been somewhere around here. That's 1, 2, 3, 4, 5, 6, 7, 8. So the blue line would be here, around here, red here, and green here. So let me draw a line here. If you imagine the price action, this bar and onwards, you won't see anything, but you'll see those lines around here, the gator lines. And at that time you'd see the gator lines are nicely wide and open and going up. So now let's delete this line and change it here. If I were to put a line between these two, the red and blue, you'll see that there's a relatively good angle. I mean, it would have been a lot more angle if this bar appeared around here. Then your gator would be 1, 2, 3, 4, 5, 6, 7, 8. Then your gator lines would be around here, this oblique line. So here the gator would be nice and wider. The angle would be something like around this, and this line would probably go over there. So you can see the angle has now increased a bit. So this would be an ideal spot if this bar was there. But since the bar appeared here, the angle changed, because then you have to compensate this. So I'll take it there, and this one should be around here. So there's still angle, but what I want to talk about, the reason I'm talking about this bar is that this bar has got two problems. One, it has appeared inside a box. Now it is inside a box because boxes are only created when there's a certain range in the market. So there's an AIMS level up there and an AIMS level right here, and that has been created by these 5 or 10 candles, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. These Well, particularly these candles, 1, 2, 3, 4, 5, 6. These 6 candles, including the fruit bar, if I were to make what I call a micro angle line, and it will go through this. So if I were to put it through the midpoints of these, this is quite horizontal market. And when you consider this, then if I were to draw another line through the gator lines, then this would suggest that we don't really have an angle, an expanding triangle. We actually have a contracting triangle. Well, let's not call it a contracting, but these lines are going to diverge around here. So this is not what we want, like this and this. We want these ends, the one to the right side, to be expanding, opening. We don't want them to be parallel. Parallel is like this. We don't want them to be parallel. We don't want them to be contracting, where they would eventually meet each other. We want them to be in a way that price is going. What is happening there? Again. Okay. Something like this, and gator lines like this. This would be. Now we'll see if we can find spots like this in today's charts, and I'm sure we will. So macro angle, micro angle. Wherever you have a macro angle which is parallel and a micro that goes away from the gator, that's very good as well. And usually it happens in a very long go, and when the price goes towards the end of that wave, there's that last gasp kind of price action. It goes up, creates an angle, and it happened today. I'll show you later. This is another candle that happened, a bar, a fruit bar that happened just before London Open. This is London Open. This bar is London Open. So here, normally we wouldn't have taken it, but if you start trading from before London Open, which can be done, there's nothing wrong with it. It's just that in London Open you have more volatility and more price action. On this day, if you had decided to take this fruit, you'd be very lucky, because then had you taken it here, added on here, and if somehow you managed to stay through this, you would have then added on here, and this would be a massive trade. But you know, some days you'd get it, some days you won't. Some days you probably get it here, add on here, and get out here, because you know, you have a fruit candle, fruit exit, a stop on green exit, and maybe even following the green bars exit, we'd probably get it out here. So if you didn't get out here and then didn't get out here and then you had a third exit signal, most probably you think, okay, this is the best place to get out, because you know, it's London Open and the price is going down, so you'd rather stop and reverse using this fruit, go short, and maybe even have a stop and reverse here. So if you went long here, got out here, went short here, you get out here, and you'll be long again. So this is fruit, very busy and really exciting. So let me go back to this. Now let's see if you have good angle here. As I said before, we don't. You're not supposed to be doing these lines every time, but you know, for training purposes, you do this. But if you and yes, if you don't find any problem with doing this, then yeah, keep doing it. We do have some sort of angle, but not really very good angle. It's just like one straight down, so you don't even have like different micro or macro angles. But it was good enough. It was good enough. You could have taken it. There's another thing about this setup, by the way. Look at the size of the fruit bar. It's very small. So if, particularly when using fixed lots, which you probably know, we use fixed lots for fruit. On DAX, you have recommended. I would recommend. I mean, I can't recommend. It's for education purposes only. But I'll tell you what I do. Is what I think, in my opinion, is that if you do your money management risking 1%, You can calculate your lot size based on 20 pips or 15 pips. You can even do 10 pips, which would mean that you'd be risking slightly more. Your drawdown, when there is a drawdown, would be a bit higher, but your winners, your account would grow faster as well. The best thing to do is to be very conservative. I repeat, very conservative with your money management, the lot sizes, and aggressive with trading. So if you have very small position size, lot sizes, you will have more chances of having a carefree state of mind. Your fear level will come down, and the less fear you have in the market, well, I mean, you're supposed to have a state where you do not have any fear in trading. But you know, nobody's perfect, so there will be certain fear here and there as you learn. So while you're experiencing that, if you want to work with it, this is one of the ways to have your lot size very, very small. 0.5% per entry or 0.25%. Or do 1% on a bigger pip level, for example, 20 pips, 25 pips. So 15 is very good. 20 is also very good. If you do it on 30, nothing wrong with that as well. And that will bring your lot size very small, so you'll be able to take most of the signals. And because you'll be in a carefree state of mind, you'll actually make a lot of pips. So if we were using which we do, the fixed lot size, these small fruit bars are very easy to take. So for example, if your lot size was based on 20 pips, this one required only 6 pips stop loss. So if it goes in your favor, technically your ratio of your potential risk to the potential win is actually really, really high. So for example, even if you took this trade from here, and then as it went up you started trailing candles or bars, you could have made 22.4, let's say 23 or 22 pips, let's spread 3, so 19 points. So your potential risk was 6, and you could have made, let's say, 18 pips in there. That's 1:3, not counting the add-on yet. But if you put the add-on, then that's a different issue, different story, even more powerful. Right. So now, okay, so far it's been 13 minutes and I haven't spoken anything about London Open. I'm going to split this video in 2, so let's do part 2 in a bit. Okay, here we are again, part 2. Here is London Open. Let's suppose this is not exactly, but this is probably how your chart might look like. We can't see the gators extended into the future on this chart, but let's focus on the price action that we have. When you have the London Open, it's what we call the SIPs, or let's call it the SIPs, is CIP, right? Chaos influx points. That is where new incoming information hits the market. Sorry, I had dinner before this video. Chaos is the definition of it is it's new incoming information, and the higher the volume of new incoming information, the more chances prices will move. And when there is change in more change in one direction, let's suppose up then down, then we have an uptrend, and there is more change towards the downside, price is decreasing, then compared to the number of times it goes up, we have a downtrend. So up and down, and if the buying and selling activity kind of balances itself out, price would go up and down and create a range. Now, the main object of London Open is that specifically with DAX and other indices, the open times are very important. That's where most of the trading start to happen, and when they start, it kind of gives an edge. So if you were looking at the chart 4 or 5 minutes before London Open, you would have noticed these things, and then you would see this fruit candle. Now, do we have a good angle here? Probably not that much. Probably not that much. Let's see. I'm using F12 key at the moment to shift the chart to the right one by one. So I'm going to shift it by 8 or 5 candles, bars to the right, to the left, so that we could see where the gator was. 1, 2, 3, 4, 5, 6, sort of around here. So gator was kind of open. Price was not too far from it. Price had gone about 30 pips up. Not a very strong move for DAX. So it wasn't something that you could base your fruit entry on. But still, if you just wanted to use the fruit, you could still have used it, because you only have to pay 12 pips to find out. And there are chances that had you taken it and London Open agreed in your direction and probably came there and went straight away down, so you have a good trade. It could have also happened that you got in here, price came here, went back up, and instead of breaking it, comes down again, so you get an AIMS level here, and this would have been your first entry down. You'd be going short. Instead, with the power of stop and reverse. Now, the power of stop and reverse is that you are agreeing, you're staying in the now and accepting the fact, listen to this carefully, that anything is possible in the market. Right? You're accepting that in the now, in this moment of time, you're not predicting the market, because nobody can. Because every moment in the market is unique. Every moment in the market is unique. Now, if every moment in the market is unique, how can you tell that the future will be like the past? Now, it may appear visually like the past, and this is the repetitive patterns that we see in fractals, that they do appear the same, but they are not the same. They are unique. Just like human beings all look the same. Not always, but if an alien was to come down, they would describe us as humans with 2 limbs and 2 arms and stuff like that. And a car is a car, but they're all different. And you might have the same model of a same car, exactly everything the same, but they're not the same. They are unique. Every car might look and appear, everything is the same, but they are unique. And that's the same with patterns. So a pattern might look exactly the same, but what follows that pattern, for example, this pattern that we have right now, like when you saw this fruit here, what follows this, these bars that came after this, we didn't know. You cannot predict, are they going to be going down or up? So this is the definition of staying in the now, and the staying in the now can be done when you firmly believe in the 5 fundamental truths about the market, which I have it in I've got that wall paper, a note, a picture of those 5 fundamental truths, which I copied from, which I took from Mark Douglas's book, the amazing book, Trading in the Zone. I recommend it to everybody. I mean, if you haven't read Trading in the Zone, you probably don't know how to trade at all, and you will never if you don't read that book. Or if you haven't read that book, you can read Activating the Zone. That is in there for premium members. You can download it. You should have read it by now, and most importantly, do those practices that are at the end of the book. So your belief in the fact that anything can happen and that every moment in the market is unique would lead you to another thing, which is if that you don't need to know what is going to happen next in order to make money, because there is a random distribution between wins and losses for any given set of variables that define an edge. Fruit strategy is your edge. the setup one, seed, it's all your edge. But it could be any simple strategy that could be your edge. And there's another point. An edge is nothing more than an indication of a higher probability of one thing happening over another. There's a probability of success. So when you have a fruit, you don't know what's going to happen next. So for that reason, doing a stop and reverse thing is very important, because when you sell it here, you don't really know where it's going to go. And when it comes here, you still don't know where it's going to go, and you don't know where would that big winner come from. And particularly when it's London Open, this is where the trends are going to start. So you'll put a sell order here with a stop loss here, and since then it created a nice AIMS level. Even if there was no AIMS level, you could have put still a stop and reverse, which would mean that fruit bar is telling us that it's time to reverse the market, but that doesn't mean it will definitely reverse it. It's just an indication. If it happens, then fine, we're going to go with it. If it doesn't happen and it resumes the trend, so we will stop, take a loss on that trade, 10 or 12 pips, whatever is the range of the bar, and then we will continue to go with the trend. So if you follow that philosophy, you would go short here. Or it is possible that you might have thought that the angle is not very good and you didn't take it. In that case, you wouldn't have paid this rent. But that is not important. Paying that rent or not paying that rent does not make a difference. It does not, because that is not what will make you money. What will make you money is your ability to follow the system the way it is. So you would stop here and reverse the trade to go long. And had you gone long, then you had several different exit options. In my case, I went short here, long here, and then I held it all the way through to here. So that was about 45 points from here to there. Why didn't I exit here, if you may ask? Yes, I could have at times, but when it went around 25 pips or something, the feel for the market at that time was that it was best to stay with the green line. And then after around this area, when you can see that the price bars and the gator lines are kind of very parallel to each other, then there was no need to take any fruit after that. So it was here or at the AIMS break. Nice, lovely trade that was for the morning. And this should be enough. If you get a trade like this, just shut your computer and come back tomorrow. There's another scenario. If you had gone long here and stayed through here and then played that London Open the way we normally played, along with the two entries, you could have stayed with the two entries, or you could have added one more here and then followed it to here. Then you would have made about 40, 60 and 70, so about 170 to 165 points. Now imagine if you had risked, you had calculated your lot size on 15 pips and you just made over 150 pips. What is your growth? It's 10%, right? So it's so awesome that you could calculate your lot size on a much bigger pip level, let's say 30 pips. And if you do that, then taking an add-on will be very easy for you, because, for example, if you took one entry here and there was no AIMS level and you wanted to take an add-on here, which was about 30 pips away from your first entry, you would still be able to take it, because your lot size is based on 30 pips. So even if you took a hit, ooh, where have we gone? So yes, so this is the London Open first trade, and I forgot what I was talking about when I hit the pause button. So let's go forward. And so basically, after taking this trade, your trading will conclude. Or some of you might be thinking about the different fruit indications. So let me talk about them one by one. So this is London Open. Did this one have good angle? Yes, it had good angle. Let's take it there. See, it would have been here. So let me draw that line for you, which we shouldn't be drawing in real time. You'll be just imagining it. Eyeing it is very visual. and gator lines would be somewhere around here. So this was very good angle. So if you took this trade and you had a stop loss here, or even stop and reverse, there would be nothing wrong with that. Sometimes they will clip you here and then, you know, give you two losers, one maybe one loser or maybe two losers somewhere here, and then stop and reverse. You could have stopped and reverse here as well and then gone and stayed with the green. For example, you were long here, then you put your stop loss here and put a stop and reverse here, and this got you in, which in this case it didn't, but let's suppose it came down here and it got you in. You could still then stop and reverse here again. And imagine if you stopped and reverse, you would still have got about 20 pips here. Okay, this candle then had this. Why do I keep saying candle? This bar had good angle as well. In fact, I remember I was talking in Skype and I said I had my pending order here. But then this immediately broke there, so that was cancelled. I didn't even have time to put my stop loss here or anything like that. So we just went into normal and sideways. This fruit, now look at this fruit. This fruit literally has no angle. This is a very good example of parallel markets. Now let me do a macro line. So a macro line would be something like this throughout the, you know, visually through. If you do it from where price was touching the gator, you know, when it came out of the mouth of the gator, from that position to where price currently is, then it would be somewhere around here, because you have to take into account this as well. And now if I put my lines between the two lines, then it's quite parallel. I think you would agree. Now what is the micro or the smaller or the angle of the most immediate bars? That is probably even more parallel, because let's suppose you see we have this fruit bar and the preceding price action is boxed, right? It's not like it was here. You see, this was outside AIMS box going away from the gator. Here price action is all boxed. So it was, this fruit happened after a range, a sideways market. So the line would be somewhere like this, and this line should actually not be moving. So it should have been like this in the previous example, something like this. These two lines, not very good angle actually. If I draw it like that, that would be this. And if you focus on this one, the micro one, there is not really good angle. It's parallel, almost convexing, almost converging somewhere. So these were not good. Let me delete them. This one then pulled away a little bit. So if you took it, it wouldn't be such a big disaster. It wouldn't be such a big wrong decision. And of course you would be stopped out here or here. And then this one again didn't really have good angle and price was just going sideways, so I didn't take that. This one, however, if you look at that, was worth taking. The angle is quite good. Oh, and let's see what happened if you took that. Well, you would have taken this short and then exited there. Would I take a stop and reverse there? No, and not in most cases. Why? Because the market has been going up for a considerable amount of time, and it's the same wave, and now AO is diverging. I don't see that there is more potential in the market to go further up. But if I took it, there would be nothing wrong with it. Stop and reverse, and then that will be stopped and reverse here again. See, again here with this fruit, there is not much angle, right? In the immediate price action, this is quite parallel with this, right? So you have to keep in mind these immediate preceding bars. That kind of gives you an idea what's happening in the market right now. Not really a good angle. The market is not moving up where the too fast. It's not moving up too fast. It's losing momentum, but it's not completely turning around. The rubber band principle does not apply, so you could have ignored this one as well. This now is a very good example, like when price comes back to the green and then kind of pulls away again. So you need at least 3 bars to create an angle, and these 3 bars could have created a tiny angle for you. Let me do it, yeah, like this, and gator somewhere around here. So this could be taken, and you would have taken this. And it's actually a very good signal. I'm not saying you should be taking trades based on divergence and stuff, but it's one of the things. Divergence means that a trend is coming to an end, and then if you have that, and then you have a fruit with angulation, kind of increases your odds. But our focus should be on fruit with good angle. So if you took this stop loss, it's only 10-12 pips. With an add-on here, let's see how it panned out. So yes, you took a trade here, and then you would add on below this, which would trigger around here, and then it continues. This fruit market hasn't really done anything, and we're interested to go short. So if you were too cautious, you could have put your stop loss or stop and reverse here. In some cases it might hit you and then go down, in which case you will probably miss out on something, a good downtrend. Not necessarily you'll miss out, because you can always stop and reverse and go down again. Fruit is very busy. Fruit is really a great strategy. It just allows you to take advantage of all the price action. So then you would go further, and by this point, like here, you'd see that your fruit campaign is actually a success already, because you are 23 and 12 pips up. Sometimes to boost yourself psychologically, you could have taken profit straight away here above this, and it would be perfectly fine, because you would not only have recovered your previous trend, you would actually be in profit. And I like to get out on the green line more, or when price moves considerably in profit and then it kind of pulls away, that's even better. So here, oh, I remember now. Today I actually got out on this, and I remember that now because I remember posting in the Skype room after this candle that I was happy to know that my early exit, and the exit on the green line happens to be the same, so I was really happy, pleased with it. And this is the end of the London session. I'm afraid I can't talk about the New York session now, because I've already spoken about more than 23 minutes. And I think this should be enough for tonight. I hope I have the time and the will to make more videos. I really enjoy making them, but it's a hard job. I hope you liked it, and let's upload it. See you in a bit.